In this lecture example, we look at section 24J where there's apportionment. Now, we are going to do exactly the same thing that we've done in our other lecture examples when it comes to calculating the total accrual. However, the big difference that you have in this question or in this example is that your accrual period might fall partly inside and partly outside of your year of assessment. You can only include in your tax calculation whatever relates to that specific year. So if it's partly inside this year and partly outside of this year, you will have to apportion it. And that apportionment you will do on a day-to-day basis. This is important. This is what the Act tells us. Right, so this is the most complicated it can get. But guys, please note, your big calculation of accrual of interest and so on will still count a lot of marks. Alright, so let's start looking at it. So D Limited is a registered VAT vendor with a December year end. So let's do the year end. I'm going to draw a graph out for us. Runs from the 1st of January to the 31st of December. They then tell you, on the 1st of July 2013, D Limited issued a 100,000 rands debenture with a coupon rate of 10% paid annually. Right, paid annually. The debenture has a maturity date of 30 June 2016. So now, what do we have here? And let me actually just make this a little bit shorter. Okay, so that's our year end, our tax year. Now we have our section 24J accrual period. Now what's important here is that this started, I'm going to draw a big line like this. This started on the 1st of July 2013, and the first payment period will end basically 30 June 2014. But let's just say 1 July 2014. Okay, so that will be, so let's call this PMT1 or N1. Let's actually call it N1. That's period 1. Our next one will happen on the 1st of July 2015, so just the day before it. That's N2. And then the 1st of July 2016, N equals 3. Our tax year runs from the 1st of Jan 2013 to the 31st of December 2013. Right, so let's actually just do it here. Our tax year then runs again to 31 December 2014, runs to 31 December 2015, and runs to 31 December 2016. So now what I want you to see, if we look at this, okay, so I'm zooming out a little bit, let's take a look. So what I want you to see is the purple, that is your accrual period in 1, in 2, in 3. So what I want you to see is only the portion that falls within your tax year. So 2013, this is our 2013 year, right, this whole space here. But what of that falls within this tax year? Only this portion over here. Right, so our interest on our calculator when we do it is going to be calculated the accrual period from the 1st of July to the 31st of July 2014. So 2013 to 2014, so to 30 June 2014 basically. But the 2013 tax year, only a portion of it falls within our tax year. So July, August, September, October, November, December, January, February, March, April, May, June. 31 days, 31 days, 30, 31, 30, 31, 31, 28, 31, 30, 31, 30. Okay. 184 days, 181 days. Okay, so that means this interest here is calculated for this purple period. It's calculated for 365 days, but only 184 out of that 365 falls within our tax year. So when we do 2013, right, I'm going to say here I1. So when I'm talking about I1, this, you don't have to write it like this in your test. I'm just trying to show you what I'm calculating. When I'm talking about I1, I'm talking about the interest for this first period. So for N1, the interest. So for 2013, you'll take whatever that interest is and you'll say times 184 over 365. Right. So you'll account then for this interest over here. 2014, what are we going to do in 2014? So now, 2014 is an interesting one. So first, I just want you to remember what our tax year runs. Our tax year runs this entire period. Right, so let's do it like that in blue. This is our entire tax year. Now you need to understand that part of our tax year, this first part over here, is still the same interest that we calculated in the previous tax year. But it's now just from January, because this is where January is, to July. Okay, so this I1, which I spoke of, in 2014, you'll now have I1 times 181 over 365 days. 181 is from January until June. What also then happens in 2014? So this is still, this in blue is 2014. Our next accrual period for interest, which is calculated from the 1st of July to the 31st of July 2015, for 2014 to 2015, so N2, so I2, we have from July until December. Remember, that's our tax year. Yeah, so we'll also have I2 times 184 over 365. In 2015, we'll have a repeat. So in 2015, this is our 2015 tax year, guys. Okay, let's just clean all of this out. Our 2015 tax year runs from 2014 to 2015. Right, so this period in green. What do we have there? From the 1st of July until the from the 31st of December or the 1st of Jan 2015 to the 1st of July 2015, we have this interest from period 2. Right. So again, we have in 2015 interest for period 2 times 181 over 365, because that is from, what do I say now? 181, yes, because that is from January to June. Then we have N3, can you see? Right? And that period, yes, N3. So that period N3 runs from the 1st of July to the 2015 to 2016. In our 2015 tax year, we only have this period over here. So I3. So in 2015, we'll have I3 times 184 over 365. Then in 2016, what happens in 2016? So let's clean up again. What happens in 2016? So it runs from December 2015 to December 2016. We only have this period from Jan until July, where we will use N3 or I3. So I3 times 181 over 365. Right, so guys, that is the apportionment that you need to understand. You need to be able to draw it up like that. So let's then just look at the rest of the question. So First thing that we need to do is we need to still be able to calculate I. So they tell us in this question that it was issued for 100,000 rands. So that's our present value. Payment is at 10% on the coupon rate, the face value. Future value, it will be redeemed at 100,000. I'm sorry guys, just these brackets need to be in there. Right, N is 3 and I is 10. So, we do our normal calculation. Initial amount, accrual, payment. Adjusted initial amount. Right, so you see it's the same story. Now that you need to just understand what this now calculates. So, the first accrual amount is 10,000 rands. Now, what is that 10,000 rands? Where does that 10,000 rands go? That 10,000 rands is this for period 1 in our timeline, and period 1 runs from the 1st of July 2013 to 1st of July 2014, but only a portion of that falls in period 1. So if interest is 10,000 rands, basically what it means, 2013, when I is 10, it's 10,000 rands times 184 over 365. That's the only thing that happens in 2013, and that is what you can see over here. What happens in 2014? We have the interest from period 1, from N1, so again that 10,000 times 181 over 365. We have that, plus we have then the interest from period 2. Now the interest from period 2, how is that calculated? Same way as usual, guys. Right, so it's that 10,000 over there. So that 10,000 is then apportioned. Right, so N1, N2, N2, N3, N3. And that's basically what we do for the whole of this question. Right, the next one is the same concept, but now I'm just showing you that it works exactly the same when the debenture will be issued at a discount. Right, so when your yield to maturity, I on your calculator is different from the coupon rate. So in this case we have a December year end again for the company. So tax year, 1 Jan 2013 I think, yes, to 31 December 2013. 31 December 2014, 31 December 2015, and 31 December 2016. Okay, so they tell you then on the 1st of July 2013 we issued a debenture of 100,000 rands at a discount of 12%. So guys, immediately that means our present value is minus 12%, so 88,000. The debenture, the coupon rate is 10%, so payment 100,000 times 10%. It will be redeemed in 3 years, so future value 100,000, and we calculate I. Alright, so I 0.15208015867. Sure. Alright, so 1 July 2013. So what I want you to see is it was issued here on the 1st of July 2013. So our first period will run right as follows. So again guys, so this is N1, N2 will run until the 1st of July 2015, and the 1st of July 2016 is when N3 will run. So it's again basically the same amount of days. So what I want you to see, so what's going to happen in 2013 guys, the interest we're going to calculate, we're going to say times from the 1st of July to the 31st of December, 184 over 365. So I1. What are we going to see in 2014? So this is our 2014 tax year. It runs from the 31st of December 2013, or 1st of January 2014 to 31st of December 2014. So what happens in that tax period? We have part of N1 in here. We have this period in here. So interest for 1 times 181 over 365. So that is basically Jan to June. Then we have N2 part of it, and that is from July till December. So I2, 184 to over 365, and that is July to December. Right, what happens in 2015? 2015 runs from beginning of 2015 to end of 2015. We have part of N2 in there. So I from 2 times 181 over 365, that is Jan to June. Then we have I3 in there. Right, so I3, well, I3 runs from the 1st of July sorry, let me just now check where am I? Oh, we're in 2015. Yeah, sorry guys. So the next one is from the 1st of July 2015 to the 31st of December. So I3, so times 184 over 365, and that is July to December. And then what do we have in our 2016 tax year? We just have this period from Jan until July. So that's N3. From January until July. Alright guys, so based on that, you then fill in your calculation. So let's look at the accrual amount. The accrual amount for N1 is 13447. So what it means, if I just take it to your timeline, it means this N1 over here is 13447. So what do we do with that 13447? In 2013, we have 13447 times 184 over 365. In 2014, we have 13447 times 181 over 365. Right, so that's the first one. The second one, 91,447 times the yield to maturity gives us 13,973. Okay, so N2 equals 13,973. So what are we going to do with that? In 2014, we have the 13,973 times 184 over 365. And then we have it in 2015, the next part. So I just want us to look at 2015 just so that you can see it works like this. So 2014 will have 13,447 times 181 over 365 and 13,973 times 184 over 365. So part of the next year. Alright, and here we go. 2014. Okay, so guys, important for you to just see where it is. Make sure that you trace that through to your question. Then example 3.3, guys, going to go through it quite quickly. It's the same concept, right? The difference is here, now we have more than one accrual period per year. So what I mean by that is in our previous example, our accrual period ran a year from 1st of July 2013 to the end of June 2014. Right. Now we're going to have more than one PMT period. So they issued a 100,000 rands debenture that will be redeemed in 3 years at a premium of 12%. 10% is the rate on the debenture. And look, PMT, it's payable on the 31st of December and 30 June of each year. Now, this one is not too bad. Actually, it's started to correct. So here's our tax year. It runs from the 1st of Jan 2013, 31st of December 2013. Okay, so there are our years from 2013 to 2016. Then they tell you, on the 1st of July they issued it, and you have to pay it on the 31st of December and the 30th of June. Okay, and it is for 3 years. So, how many times a year do you pay? Twice. 3 times 2, 6. Okay, so what I want you to see, how is this going to happen? So this is going to be our interest. Here is 1 July 2013. The first one runs until the 31st of December. So in 1. Our next period, just changing color to distinguish it, runs until the 30th of June 2014. N is 2. Next one runs until the end of the year. N is 3. Right, then from the 31st of December to 2014, so 30 June 2015, N is 4. N is 5. Right, so you can see what I'm doing. It's every 6 months we pay. I'm just filling it in. Okay, so now hopefully you've already started anticipating what's going to happen here. This is great. So now you just need to identify what periods fall within your year. So 2013, right, what happens in 2013? It runs from the 1st of Jan until the 31st of December. What do we have in that tax year? Just N1. Okay, what do we have in 2014? Our tax year runs from the beginning of the year until the end of the year. We have N2 and N3. So right, well, let's just continue. 2015, what do we have in 2015? It runs from there to there, so we have got N4 and N5. And then what do we have in 2016? We have only, so it's this period over here, we have only N6. Alright, so now guys, basically what it means, I'm saying now N6 here, but it means that the interest for those periods, that's what will be included. So now you still do the same calculation, right? How much is it issued for? How much did you pay? How much will it be redeemed for? What is the interest on that? Okay, and that's what we calculate. So, now when we calculate it here, so the accrual period that we see there, I'm just going to put down for you, that's N1. Right, and guys, obviously you've now seen this calculation so many times, but I just want you to see. So N1, N2, N3, N4, N5, and N6. So now, based on what we discussed, what goes into it, you just populate it. So 2013, we only have period 1, or accrual period 1, so we only have period 1, 11498. Right, so if you go and see, 11498. Alright, period, or tax year 2 has 2014 has N2 and N3 in it. So N2 and N3, 11670, 11862. There we go. And etc., until the end of the question. Right, guys, so that is section 24J with apportionment. Please be aware of it. And like I said, guys, again, you get a lot of your marks with this calculation over here. So that is the most important. They don't, 10 past history, things don't seem to go too crazy. You have too crazy apportionment and things going on here. Great, thank you very much.